You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, Nasdaq proudly launched the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the Nasdaq 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched Nasdaq 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on Nasdaq's full suite of index options products at www.nasdaq-100-options-NQX-NDX-VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. You know what's going on in the world of vol? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are binging these days. I've been doing the show for quite some time, talking to some folks about this yesterday. Over a decade just for the show alone, obviously the full network. Over 16 years now. So we got a long track record on most of the podcast outlets. But if you do like what you hear, do continue to throw a few stars our way. We see a new influx of listeners all the time, and clearly the algorithms like the new reviews as well. So even if you think we have a lot of reviews, get in there. Add some more. It always helps new people continue to discover the show. We appreciate it at the end of the day. And then, of course, if you want more content in your lives, including you don't want your broadcast day to end with volatility views, you want to continue the party afterwards, get some unusual activity in your veins with options, oddities, also get great pro Q&A sessions, live access to this and everything else we do, so you can heckle all of my co-hosts here live. It's always fun. As well as giveaways, we just gave away our great pro trading crate. Congratulations to our pro member JLS for winning it. Great stuff here. Another one in the offing soon. Get your name in the hat. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the show today, I ran into the Pit Boys for the first time in person, probably since pre-pandemic, both of them together in a room. That was fun. If you haven't heard it yet, go check out the live episode of the option block we just did yesterday over there at the CBO. That was great to see all those guys in person in one room. They're off at doing other option pit events right now, including a Cubs game they have right now, which they wanted me to go to. I said, no, of course not. I'm going to be here for the people talking vol. So I am here while they're out drinking at Wrigley Field, listeners. So no Pit Boys today, but we are joined by a twofer in the Nasdaq hot seat today. First, my in-person co-host extraordinaire, fresh off the Nashville OIC conference and rearing for more, Mr. Kevin Davitt, the head of Nasdaq Index Options Content. Kevin, welcome back to the show. I missed doing it in person, sir. That was fun.
Me too. That was fun, but I'm excited to be back, and I'm excited to be joined by an old friend of mine. I'm looking forward to this week, and I'm a little bit envious of the option pick guys because we have a perfect day in Chicago for our Cubs game. So
yeah, they picked a good one. They picked a good one.
Decision.
Not 35 degrees and sleeting like it has been on the lake recently. They actually get the one good day we've had in Chicago. But I digress. Instead, let's keep on rolling and introduce our other co-host on the show today, holding down the other half of the Nasdaq hot seat, a newcomer to the program and indeed to the network, Mr. Eric Lewis. He is an options trader and host of the weekly options podcast. So options trader and podcaster. That's a resume I think I can get behind. Eric, welcome to the program, sir.
Hey, Mark, thank you for having me. Kevin, thank you for the invitation. And I, too, am envious of anybody that gets to enjoy a beautiful Chicago day. I'll tell you, I live down here in Texas where we get a lot of those nice days, but there's nothing like Chicago.
We appreciate them more here because they are so few and far between. Makes it fun. But Eric, as a first-timer here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the options world, as well as what the heck you talk about on the weekly option every week.
Yeah, I appreciate that. My journey in options started about 20-something years ago back at the CBOE. So I spent about 4 or 5 years trading options down in Chicago. Went to business school and finally decided to make my way back to Texas. So I spent roughly 11 years trading energy. So I was focused on commodity vol for a long time. I ended up starting the weekly option podcast about 5 years ago, really as a conversation with retail traders. So we don't get to talk vol as much. It's mostly directional price movement, but it's nice to be on a show that's gonna, talk vol and vol and all of that other crazy stuff that you professionals like to get into.
A lot of crazy stuff. I've always said for years, that line of demarcation between retail and professional has been retail tends to focus more on delta and direction. The pros tend to look at vega and volatility. That said, those lines are very much blurring these days. We are seeing a lot of super pro retail flocking in and really elevating the game over there. So I'm not sure if the distinction is quite as stark as back when we launched the show, but intriguing stuff nonetheless. Let's see what else is intriguing in the world of vol, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We review the week that was and indeed still is from a vol trading and trending and analytics and all sorts of fun perspectives. And coming into the start of the show, we are seeing the markets trying to gain back some of what they gave up this week. It's been a very topsy-turvy week out there. A lot of red on the screen. Obviously, whenever you have a Fed week, usually tends to spook folks, spook the market. And we saw a lot of that earlier this week. This 4,100 level that we've kind of been glued around. We were kind of vacillating around below it a lot earlier this week and now back above it here as we're kicking off the show on Friday. S&P up about 1.5%, Dow up about 1.25%, and Nasdaq closing in on nearly 2% to the upside, about 1.9% right now. So firmly back in the green out here in the markets, but net, if you look back to where we started the week, pretty much right back close to where we were at the start of the week. And also from a vol perspective, we are kind of almost back to where we were this time last week as well. A little bit higher But that said, we had a lot of vol going on intra-week, so a lot to pay attention to. Of course, we are in earnings season. That is buffeting the market a lot these days. Apple surprising a lot of people after the bell last night. And so that, of course, lifting markets. Today, we also had the jobs number this morning as well. So kind of a bit of a combo out there to lift markets after a bit of a dire start to the week. All that a long way around to saying VIX when we kicked off the show, closing in on 17.5, about 17.45. That puts it up about 0.45 on the week. It's not a heck of a lot of evolution net show on show, even though in between shows, we did see VIX start to get some of its luster back. As you'll recall, listeners, by the end of the week last week, on our show last week, we were still around a 17 handle. But by the end of the day, we were flirting with a 15 handle. That's how crazy and light vol got. And then, of course, we came roaring back to life this week. VIX cash got up to a 21 handle at one point earlier this week. So we did see a lot of movement in VIX, which kind of puts the lie to a lot of people were saying this time last year that VIX is broken, VIX is useless, VIX is dead, or maybe 0 day was to blame. Obviously, there's still some data work to be done on the 0 day impact on vol last year, but still, the other comment everyone really made was that, we're just in a higher vol regime right now. Vol really can't move as much when you're starting at a baseline of 22 or 25 or 28 versus when you're at a 15 handle. Look, you can pop 5 handles in a session. So that's kind of what we saw this week. VIX getting some of his mojo back, showing that it can outperform to the upside again, which is why you trade this product after all. And also maintain the upside for a little bit longer, not an extremely long time. Obviously, we're back to where we were this time last week almost, but we had moments where the vol upside lasted a little longer than normal, which is nice to see for all you folks out there trying to buy VIX calls or do VIX upside trades, and you have a day job. You can't get out of them in time, and then you miss your window. You have a little bit more of a window. Not much, but a little bit more of a window this week. VVIX, vol 91, up about 6 points this week. That also hit a nice triple-digit level this week of right around 104, so VVIX got pretty frothy as well. And VOLQ, obviously the at-the-money vol of the Nasdaq 100 out there, 1860. That's down, actually, almost a full point, down about 0.9 from where it was on the show this time last week. And also, interestingly enough, watching this dance between VIX and VOLQ, that spread has tightened a bit. And we did see earlier this week when they were both at their highs, it was less than a point. VIX hit about 21 and Nasdaq hit, or I should say VOLQ hit a high of 21.93. So to the upside there, that spread tightened up. So interesting stuff to watch. We'll go around the horn. We'll start with our guest, Eric. An interesting week, a Fed week, obviously a lot to unpack. What caught your eye from a volatility perspective out there this week?
From a vol perspective, I have to tell you, I've been watching mostly the tech stocks. So they've been doing a lot of fun things, and you're seeing companies like Apple, you're seeing Nvidia, you're seeing Shopify. Do some stuff. So from that perspective, that's where my eyes have been. That's where my trades have been focused this week for sure.
Are you a big earnings season guy? You do a lot of trading around earnings season?
Not a lot, but if you're in the market, you're in the market. I definitely I like seeing big moves. It's always nice when they work out your way. But having earnings on top of Fed gets a little it's been a nerve-wracking week. So let's just say today I'm giving more of a sigh of relief for sure. But it's been a fun week, just like you said, with vol springing around. I mean, week over week, you can look at it and say like, oh, it hasn't done that much. But when you look at what each one of these days has brought, has been wild. So I'm happy to have a relaxed Friday to walk into the weekend with a few wins on the tech side.
Yeah, it has been an interesting season to watch. We'll get to some of that data a little bit on in the show, listeners, of course. But Shopify, we were just talking about this on the option block yesterday. Of course, they've had a good week, up 28% this week. So a good week, I think, by any definition, certainly during earnings season. We profiled some interesting trading on the option block show yesterday. Someone loading up on straight at the money puts, pretty meaty, and a little bit farther out in January too, right after the announcement, which turns out, at least in the near term, to have been completely the wrong direction. Stock has pretty much done nothing but shoot straight up. Obviously, they probably have some stock against that, so they're probably happy on the stock leg, maybe not so much on the options leg, though. But a lot to unpack. Let's go around the horn to Kevin. Kevin, obviously a busy end to the week. Apple last night, jobs report before the bell today, and everyone's still kind of digesting what we got from the Fed earlier this week. What was lighting up your tape this week, sir?
Yeah, of course, the Fed is kind of front of mind as it has been for over a year now. I am sort of focused on further out the curve. If this is the end of our rate hike cycle, what does that mean for risk assets? I'm also intrigued by the jobs data. That's been a point of emphasis for Powell in press conferences. And quite frankly, the employment picture has remained fairly strong despite a 500 basis point move in rates over the past year plus. I like to see that. I'm not somebody out there cheering for a recession, but it's interesting to see how well the labor market has held up in the face of significant rate moves. Also, when I was thinking about having Eric on and knowing his background, so the two of us worked together at a specialist post on the VOLQ many years ago, and I have known him since the early aughts. And I've followed his work throughout the years, and we would talk periodically about some commodity stuff. And so I've had positions on here and there in crude oil. And the moves this week in crude have been fairly significant. I think you could view that as one of the bellwether proxies for recession fears. And we saw the energy market move around quite a bit. And it's something like 12% off lows from less than 48 hours ago. That I find interesting. And then also in commodity land, copper traded near 3-month lows, which I also found interesting. From a realized vol perspective, it's picked up a bit from the broad-based indices. Now, that is not to say that we are in a high volatility environment, but if history is any guide, realized vol tends to narrow through earnings as you get kind of offsetting good news, bad news, and net for indices, it tends to constrict. And I wonder if it will sort of open up a bit as we move into debt ceiling wrangling. And I dislike talking about that, but it does seem like a potentially very real concern for the market over the next month or so.
Yeah, you bring up a lot of interesting points. We touched on some of that yesterday on our This Week in Futures options program, all of the madness and energy and metals and everything else. But since you mentioned it, might be a good time to bring it up here as well. We don't get a chance to discuss commodity vol on this show too often, but obviously a big driver for a lot of the moves and developments we see out there in the broad equity and volatility space. Eric, you mentioned you spent a lot of years trading in the energy space. Obviously, energy coming under assault this week. WTI back in a 60 handle at 68. Last we checked it on the show yesterday. Nat gas, after threatening, this time last year, we were talking about 9 and 10 and even above handle calls trading for size in nat gas. And we're back at a 2 handle now. And we're talking about 1 3/4 and 1/2 puts trading for size and a pronounced bid to the downside in the nat gas skew. So these are crazy times we find ourselves in there. What's catching your eye out there from a commodity vol perspective these days, Eric?
Definitely crude oil, crude oil vol. And I mean, there's such a high correlation between crude oil vol and the VIX actually, that you can track, you could almost trade them against one another. Definitely on the crude side, look, there's so many more, there's still a lot of unknowns in the world. Definitely, with crude, expecting prices to continue to head lower. I mean, I'm honestly not bullish crude at all from a vol perspective. I think this vol is low. Could track a little bit lower before it goes higher. So near term, definitely looking at more short vol positions. I'm not a fan of being short longer term commodity vol at all. Lots of blowups in the past. I've seen people blow up being short natural gas vol significantly, like really significantly more volatile than equities in general. So I would definitely, if I'm going to be short commodity vol, it's definitely in the very, very near term. But experience has taught me like don't bet against it. I'm more of a long vol guy in the longer term.
They don't call natural gas the widowmaker for no reason.
Exactly.
And that's a flame I find myself continuing to come back to periodically. I do think big picture that you can see spillover from a broad volatility perspective. So when you see a product that is very tethered to sort of global economic growth like crude oil, or even the metals, that can sort of drip into other markets, be it equities. I have spent maybe too much time on this show talking about the MOVE index, which is a measure of forward volatility or expected volatility in the interest rate world. And that too picked up quite a bit this week. That gives me pause. And I think it is probably in many ways tethered to what's going on with the debt ceiling, whether that's going to be resolved in a timely fashion or they're going to have to do extraordinary things to keep federal employees paid or whatever the Treasury has to do. And so I do like to keep a broad track of vol. Like my focus primarily is on the equity index side, but it's interesting to see how snappy some of these big picture markets have been of late.
Yeah, over the past year, nat gas has just been impressive to watch and or terrifying. But a lot of people come on our TWIFO program who live and die in the nat gas market, and they were all adamant that this is not a market for novices. It's not even really a market for experts at this point. It was so volatile. We were hanging out at triple-digit vol levels for the better part of last year. We have come off those levels now, but it's still frothy. If you're wringing your hands at a 15 VIX last week, listeners, then may I suggest maybe the energy space, in particular nat gas, a little bit more vol to be found out there. That's been just kind of blown the doors off. The only thing that can really rival it on our TWIFO program really is the crypto side. And even those have come off quite a bit. Bitcoin's down around a 55 vol or so right now. ETH's in a similar ballpark. So nat gas kind of in a rarefied air of its own right now from a vol perspective. So fascinating stuff. Are you guys watching the commodity vol space? If so, you should be checking out our TWIFO program. So go check that out. It's a fun one, even if we do say so itself. But keeping it on the vol futures theme, let's keep on rolling out there into the volatility surface for this week. As you probably could guess from the numbers I laid down at the top of the show, not a heck of a lot of evolution net show on show. In between, we did a lot of living. The curve rallied up. The curve came back down. But right now, we're kind of hanging out pretty close to where we were this time last week. When we kicked off the show, that front May future was up about 0.15, so pretty much unched. And the June future down about a quarter. So not a heck of a lot of evolution on the docket there. Eric, when you're not busy watching the commodity futures, you spend any time watching the vol futures and anything catching your eye out there this week, sir?
I'm looking at what's going on right now with the VIX coming off a little bit today after such a volatile week. I think going into next week, let me rephrase that. Am I too soon? I don't want to go talking next week just yet. But definitely, let's just say with all the answers haven't been answered in our economy. There's still some things coming out next week, like CPI. Definitely could see vol kind of catch a little bit more of a bid than what it's showing today.
That would certainly be interesting. Kevin, same question for you. I think catching your eye out there in the vol surface this week, sir.
Yeah, so we spend a fair bit of time looking at the move in the VIX futures on this program, and to see very early in a cycle. So when the May futures had 3+ weeks until expiration, and that spread between May and June last week, I'm fairly sure settled right around 285 wide. So May nearly $3 under June. That is a very steep contango, particularly when you have that much time until the front month rolls off. Right now, I think that's come in to right around $2. From my perspective, over a longer term time frame, that's still relatively wide when we have just over 2.5 weeks, I think, until May comes off the board. So I'm always somewhat in tune with that month 1, month 2 spread and the extent that it relates to VXX and other vol-linked ETPs. So seeing that spread narrow, 85 cents, 75, 85 cents this week, I think is interesting. Whether the curve continues to flatten will also be interesting. But when we have broad-based indices continuing to kind of chop around that 4,100 level in the S&Ps and the high end of the range around 13,200 in the Nasdaq 100, it's hard to imagine that happens without a sell-off in the indices. And I'm not saying I expect that, but if we see a pullback kind of post the crux of earnings next week or the next 2 weeks, wouldn't be shocked to see that spread, the VIX term structure, flatten a bit more.
Yeah, you're right. That spread is so crucial to everything else we're going to talk about later in the show, right? Every vol ETP, it seems like, is driven by that spread to some degree. So, yes, a very important part of the futures curve out there. What else is important in the futures world is how many of these things they're actually putting up. We have the numbers coming in from OCC this week for the month of April. Remember, we're coming hot off the heels of the busiest month in the history of the options business. So all of us here on the show today have been touching options in some way, shape, or form for quite a bit. And none of us have obviously seen a month like March, 1.1 billion contracts. That's just a record across the board. So everyone was wondering if we could keep that up for April. And the answer was no. 764 million contracts on the tape, down 2.4% year over year. Now, there should be a caveat there. April is pretty much one of the lightest months of the year, usually anyway. April and February have the fewest number of trading days, 19 this year. You're not going to get a 1 billion contract month in a 19 trading day month unless things are just off the hook, which would be another topic in and of itself. Drilling down a little bit, though, there were some interesting highlights here. Index options obviously continue their rampage. 0-day cannot be stopped, up 43% from April of last year. So that was really the lone bright spot. Everything else was flat or down. Equity options down 12%. And of course, our beloved futures, the vol futures, down nearly 20%, 19.1% a week, or I should say month over month, and indeed year over year out here. So intriguing stuff, a lot to parse there. Eric, we'll start with you. I'm curious. You've been an options guy for a bit now. You host a weekly options podcast. What were your thoughts on the historic volume numbers we were putting up in March? And then B, the fact that we couldn't maintain that into April, including the vol futures, which once again kind of took a shellacking in April, sir.
My question is always why, right? It's like, why did we have not why are there so few in April? And I love the 19 trading day versus the usual number of trading days. So, part of me in my mind was wanting to just do the math on the daily and how much lower is it relative to those 2 extra days that we lost, right, in trading for the month of April. But not pulling out my calculator to do the math right now. The question is why? Why were we so heavy in March versus the other months too? So, and I don't have an answer for that, but I'm sure either one of your listeners or maybe you or Kevin have a great answer as to why. So, because that'll give us a good idea as to what to expect for the month of May. So I'm less excited by the number. I mean, it's great. I'm kind of a cheerleader for options, right? I love people coming into options, more retail people. Obviously, the professionals are there. But the bigger question is, if you take this on a daily basis, what was it about the month of March that led to that like massive amount of options that got traded, the most ever, right? And I don't know if either of you has more insight on that, but it's less about the number for me and more about the reasons behind it. What were the catalysts?
I guess a little banking crisis. I guess that's good for the options market at the end of the day. Broad potential insolvency, contagion fears in the banking sector. That'll drive some paper at the end of the day. By the way, you mentioned doing the math. Luckily for you, because we knew you were coming on here, Eric, we crunched the numbers for you. We went back to the other month that has 19 trading days that we had this year, which is February, just to compare a little bit more like-to-like comparison. And even February blew the doors off of April, 887.6 million contracts versus 764.3 million. So a substantial difference even in February, even though you mentioned what is the daily number? Right now, the average daily volume is about 45 million contracts. So you can see you tack on a few more trading days to April, and that number gets more respectable. It gets into the 800, close to 900 million contract number, depending on how many days you add on there, obviously. So that's clearly an interesting development there, but still intriguing stuff. Kevin, are you on board with that banking crisis being the contagion that drove us to record heights in March? And what do you think about a little bit of a downturn in April, sir?
You're absolutely, I think, on target with the banking issues. And it's interesting, too, that we're roughly half an hour into this conversation, and we didn't mention that last weekend, First Republic went into receivership, right? So we continue to deal with a very real banking issue. In terms of assets that the failed banks oversee or managed, we're talking 2008 numbers. Now, it's a different world, and I'm not saying that we're likely to play out that way, but it does continue. And we'll see if another 25 basis point moves means that other trees get rattled. I'm not saying that's likely to happen, but you look at an ETF like KRE, that regional banking tracker, and it got smoked this week. It's up fairly big today. The one point about the industry that maybe you didn't point out, and I appreciate you leaving it to me, is the continued growth in index options. Now, in part, that is a story about the embracing of short-dated options trading that has unequivocally driven some of the growth there. But looking at some of our show notes, broken out by component, index options, average daily volume is up like 40% year over year. And that's a story that's continued now for 3 years. And we saw 2 years ago a tremendous amount of emphasis on the single name equity options. Last year, it moved because the story became a macro one with interest rates more toward index options, and you continue to see that this year. Now, as somebody that's fortunate to work with that emphasis, I love that. And I doubt that this is going to change anytime in the near future. There are benefits to expressing a market sentiment using index options. People like the cash settlement, or at least I do, not necessarily having to navigate closing out a position to avoid delivery on Friday or any given trading day. The potential tax benefits with a big old asterisk there that you need to talk to a tax professional, and being able to get exposure to a name like Apple that has a big move today, but not specifically using Apple options. So I'm pumped to see the growth in that area of the market continue. I'm not necessarily looking to run down the short dated option conversation here. I think it's been a little bit beaten up, but a lot of talk about it at OIC this week, and continued emphasis on index products, which I love.
Yeah, it will be interesting to see what side the industry finally falls on. You're right, that was a big topic last week. We discussed it on the show last week, which way we fall in terms of cash settled options, or if they play around with the contra exercise orders. Seems like it's going to go the latter way, but you never know at the end of the day. And that could also open the floodgates to so many more products, listeners, joining the 0-day fray out there. Eric, you're our first timer here on the network. I'm curious, as Kevin mentioned, we have discussed this quite a bit, but we haven't had a chance to get your take on this hot button issue. I'm curious, where do you fall on this 0-day phenomenon? Because it is spilling over. It's in our world, obviously, it's hitting the indexes, but we are seeing a lot of it carry over into the futures option space as well. So I'm curious, where do you fall on this? Are you a fan? Are you not a fan? What's your view on the 0-day phenomenon?
You know, I'm a fan just for giving people another place to express their thoughts, their expectations in the market. I remember when weekly options were first listed, right? and just the crazy. It took a while. It took a while for people to get into weeklies, and then now we don't think twice about seeing normal retail names, not even just your indexes. We don't think twice about the multiple expirations that are happening and all these other names. So I do think more products is better ultimately for the industry, but it's gonna be a little while before I think they are fully received, fully welcomed. How's that?
Wait till they launch cash settled single name options. How much confusion there will be floating around. They'll do a whole new show. Welcome to the world of cash settled equity options. That's a conversation for another day. Let's keep on rolling now out into the mothership of VIX options. Man, it was a banger week for VIX options, which you should expect in a Fed week. But these days, you never know, listeners. It's a give or take out there. And even this week is kind of emblematic of it. We had multiple days where VIX kind of shrugged its shoulders, did nothing, which, again, you're heading into the Fed, so a little bit of understandable nature there. And then just exploding, including Thursday, with just off the charts. We'll get to that in a second. Today, one of those kind of decent, but nothing blowing the doors off kind of day. We just passed 400,000 contracts a few minutes ago, 404 to be precise on the tape in VIX land right now. The ADV back up north of 700K, 757 to be precise. That's up 66,000 contracts from this time last week. Again, emblematic of how much paper we saw hitting the tape this week, especially a couple of days. Let's break down the top 10 positions, and we'll get into the action we saw this week. We are still hanging out at 9-1 calls over puts in the top 10 in VIX land. So read into that what you will. An interesting whipsaw week, and yet not a ton of evolution in our top 10. So folks, not rolling, not taking things off, keeping things pretty much the same, which is interesting in and of itself. A number 10, 168,000 of the June 26s. A number 9, $171 of the May 17 puts, our first and only put in the top 10 this week. All calls all the time, the rest of the top 10. Number 8, $185 of the May 24s. Number 7, 196,000 of the May 25s. Right behind it, $197 of the June 23s. So we're all over the place from a month and strike perspective. Number 5, kind of glued at the level it's been for quite some time now, about 250,000 of the May 50s. These have been hanging out for a while. Is this our old friend 50 Cent back? Do people just think that because it's a 50 strike? There's been a lot of fascination with this position. Hasn't really done much. Then we get to a fun one that we're gonna discuss in a little bit. Number 4, 268,000 of the May 30s. And then number 3, we touched on this yesterday on our live option block episode, listeners. Check it out if you're interested. But number 3 is 313,000 of the SEP 60s, 6-0s. And why that's intriguing, the other half of this trade didn't make it into our top 10, but it seems like someone came in this week and put on roughly 1 by 3, 100,000 by 300,000 of the SEP 40-60, selling 1, buying 3. Now, that's interesting for a couple of reasons. First off, the old ratio upside / backspread trade. That was the trade du jour in VIX land for many years on this show. People coming in, selling 1 to buy 2. If you got really hot and bothered, you bought 3 or more. We haven't seen that trade in quite some time. It went away. We haven't talked about this. I mean, all of last year, what did we talk about? Nothing but par and above calls buys for the most part on the show. So now that's interesting because first off, we are seeing some of the ratio upside plays come back, which again, we're back in the teens in VIX. That opens the door to these types of strategies that used to blow the doors off all the time. Everyone was trading them. And now they're back for size. You can maybe quibble with strikes a bit. Sell 1 on the 40s in September, buy 3 of the 60s. I don't know. We might make that a question of the week. Are you down with that, listeners? Is that your preferred MO? Obviously, it's against some other size credit book or something else out there. But still, just looking at it through the options lens as we do here on the show, it's fascinating, a wee bit head-scratching, and also intriguing that maybe now that we are back in the teens in VIX, some of this old school paper may start coming back and maybe reinvigorating VIX again. And then number 2 and number 1, still the big dogs that have been for some time. 400,000 of the June 40s at number 2, and number 1, right around 500,000 of the June 30s. So that June 40 vertical still open for size out there, listeners. I'll run down the week really quickly, then I want to get everyone's thoughts here. go out to Friday first. 404,000 contracts on the tape, like we said today. So not exactly a banger day. The big contract today, 29,000 of the May 17 puts. So our old friend in the top 10 there. Number 2, we have 22,000 of the May 16 puts. Number 3, also 22,000 of the May 18 puts. So maybe some vertical action there. Number 4, 18,000 of the June 40s. And rounding out the top 5 today on a pretty light day, 17,000 of the June 70s. I haven't looked at this one. Are they doing just a straight up vertical? Is it something else afoot? Intriguing stuff. June 70s. You like those, listeners? Yesterday, of course, the big day of the week. 1.63 million contracts on the tape. Man, that is just a banger day by any definition. We have seen days over 1 million in the past. We'll see another one this week, just slightly over 1.01, sometimes 1.1 million. 1.6 million. I mean, we're over 1 million contracts by about noon. I think by the time we were doing the option block yesterday, we were already past noon or 1 million in VIX. That's kind of unheard of volume. So just big numbers across the board. The big dog, like we just said, 302,000 of those SEP 60s. So that trade just dominating the tape there yesterday. Right behind it, we have the June 30s, 116,000 of those. Then 112,000 of the SEP 40s. So not quite 1 by 3, but pretty darn close there. The number 4, we have the June 40s, 83,000 of those. So I think the June 30-40 vertical did also trade again a little bit yesterday, a little bit, almost 100,000 each. Given the fact that we have the OI we do, it doesn't seem like they were taking it off, but we have seen some people coming in to take the other side of that vertical and actually sell it. So it's not all buyers. You might think all of the OI there means everyone's buying that vertical. Russell's favorite trade on the board right now. But it looks like there has been some selling paper out there as well. I'll have to go check and see if that falls into that camp. And then right behind it, rounding out the top 5, we have 52,000 of the June 23s. Wednesday, back to more normal paper, 498,000 contracts on the tape. The big dog, 62,000 of the May 17 puts. Number 2, 50,000 of the May 18 puts. Number 3, 33,000 of the May 20s. Number 4, 25,000 of the June 16 puts. And rounding out the top 5 on a decently active Wednesday, but nothing crazy, 18,000 of the May 20 puts. Back to Tuesday, the first day of our Fed session, and 1.14 million, so the other banger day of the week. The big dog on a Fed Tuesday, 75,000 of the May 20s. Getting some call action again, which again, VIX was coming back to life this week, so not surprising you're seeing the 20s come roaring back to life as well. Number 2, 47,000 of the May 17 puts. That's been an active strike all week long, listeners. Number 3, 47,000 as well of the June 26 calls. So maybe some time calendar action going up there. Number 4, 46,000, all very eerily similar size here, of the SEP 25s. And rounding out the top 5 on a pretty active Tuesday, 41,000 of the May 19 puts. Back to Monday, 488,000 contracts on the tape. The big dog on Monday, 31,000 of the May 17 puts, followed by 22,000 of the May 18 puts. Number 3, 20,000 of the May 15 puts. Getting a bit of a pattern here. Then we have some calls rounding out the top 5. 20,000 for number 4, the June 25s. And number 5 on a decently active Monday, but not blowing the doors off. 19,000 of the May 19 calls. All right, Eric, that's a whole lot of paper we just discussed here. Anything catching your eye out there in the volatility options this week? And what are your thoughts maybe just on the surface of that ratio vertical, the SEP 40-60, selling 1, buying 3, sir?
You know, I was just looking at the history. We haven't traded anywhere near those numbers since the pandemic, right? That is high, and it almost makes me say, what could happen that would let us get to 60, right, for that trade to even pay off, assuming it was just a pure trade. So I don't know. I mean, I can't imagine putting that trade on. I'd love to see the numbers. I'd love to know what made it work, assuming it was a standalone trade. As you mentioned, it was likely against something else. So yeah, 40-61 by 2. Huh? Who'd have thunk it?
Got a new one for your podcast. You're going to digest
exactly.
it. That's your new favorite trading strategy. The weekly 1 by 3 to the upside. Kevin, I know you're looking at a lot of things, not just VIX options out there, but I'm curious. I have to get your thoughts as well on just such a funky ratio upside trade. We haven't seen one of those in some times. It's kind of refreshing in that sense. Structured a little bit differently. The strikes are a little wonky, certainly going out a lot farther than we normally see. What are your thoughts on that trade? And did anything else catch your eye in the world of VIX options this week, sir?
Well, as a disclaimer, I am inherently a fan of ratio spreads. I think they allow for creative ways to express a directional view that can that can require very small debits, or in some situations credits, depending on how you put them on. From that perspective, I like them quite a bit across a number of products. In this situation, we haven't talked a whole lot about VVIX so far, but I think my guess would be that this is somebody looking for vol exposure as opposed to a settle over 60. And ratio spreads can, on the sheets, will look like something where if you get a volatility spike, again, we don't need to see VIX futures move up to 50 or 60. You can monetize something like that. And particularly so when you're going with something longer dated, you are putting some Vega that is VIX specific on the sheets. So that would be my take on that. But hearing big picture, hearing a 1.3 plus million volume day in VIX is just staggering. Like, good for SIBO, former employer, love my time there. They have to love days like that.
Days like that are kind of what it's all about when you're in the product business out there. And you're right, you don't need to kiss 60 or even get that close to it for that trade to make a decent amount of money if you manage it right. But still intriguing stuff out here nonetheless. Let's see what else we can find in the time we have remaining, listeners. That is intriguing. Let's get on out to the land of the vol ETPs. We were talking earlier about how important those front 2 months are in the VIX futures to about everything else we're going to talk about here. SVIX, the inverse product, had quite the journey this week as well, hanging out at about an 1840 right now. That puts it down a whopping 0.2 of a point on the week. Obviously, it got lower intra-week as VIX played with some new near-term highs here. It got down back into a 16 handle, about 1690 or so. So gaining some of that back now as VIX is coming back down the other side. Not a lot of volume today, which is interesting, even though the ADV is starting to move back in the right direction, back up to about 1,200 contracts. That puts it up about 300. It's not a ton, but again, for SVIX, you know, it's not the most liquid product out there. It still needs to work on some more strikes and some more options out there and some more liquidity in general. So that's moving in the right directions for all of you out there who are intrigued by the options, but maybe got a little intimidated by some of the spreads out there. That ADV ticking up could maybe start helping us move in the right direction. The big position out there in SVIX right now, 1,900 of the June 8 puts, followed by 1,800 of the May 8 puts. So somebody's really got an axe to grind for size here on the 8 strike across the board in May and in June here in SVIX. Interesting. SVIX at an 8? What would it take for us to get down to an 8, listeners? Intriguing stuff. Let's keep on rolling out here to UVIX 1160 right now, down about 0.4 of a point. The ADV 8,000, it's up about 2,000, so that's looking a little better. 1160 right now, again down about 0.4 of a point. So they're gonna need to reverse split this thing again soon. So that's why I said when they do a meager reverse split, be prepared to reverse split a lot. And like if we continue eroding here, we might be talking about a reverse split in UVIX again. The big position out in UVIX 3,600 of the May 10 puts, but these are the weeklies expiring today. So looks like it's all expiring today in the first half of the top 10 here. So be a very different setup this time next week. Also, the May 13s expiring today, about 3,000 of those open. So a lot of stuff going the way of the dodo today out there in UVIX land. UVXY, this thing not as interesting now that it's sub 4. There were some rumors a couple of weeks ago we're going to see a reverse split out here. Those, unfortunately, did not come to pass. The rock lobster was taken in by some Twitter rumors. Did not turn out to be correct. 370 right now, down about 1/10 of a point. So not a heck of a lot going on out there in UVXY, even though it did have a dalliance back above the 4 handle ever so briefly this week. We got up to 4.25. That's rarefied air for UVXY. The volume actually looking a little bit firmer this week. 180,000 contracts is the ADV. That's up about 9,000. We've seen about 150,000 on the tape right now. So they're still doing some numbers in spite of the fact that the product is spiraling towards zero. But obviously, it's a pale shadow of what his ADV used to be. And obviously, if they reverse split this thing, we probably would see a lot more going up. The big dog in UVXY right now, 33,000 of the May 3.5 puts. These are the ones going out today as well. So those are not looking good right now. And people tend to buy premium a lot out here. So I'm guessing they're probably long these, but you never know. They could be overwriting them, in which case they're happy campers out there right now. But again, UVXY can be a heartbreaker. So give it a few minutes. And last but not least, VXX here, 39 even right now, down about 0.4 of a point here. But it also is another one that had an interesting week, obviously, catching a bit of a bid. Again, it got up to looks like about a 42 2/3 this week. So back north of the 40 handle again, even though they gave it back now, and we're pretty much back to unch where we were a week ago. Volume-wise, starting to move in the right direction. There's 39,000 contracts is the ADV. That's up about 3,000. We're already seeing 42,000 on the tape today. Again, that's also a pale shadow of what VXX used to put up. VXX, there used to be multiple days on this show, listeners, where VXX would outpace VIX options easily. And we used to call those tail wagging the dog days. Haven't seen that in quite some time. And now the ADV is 39,000, and VIX was threatening 1 million ADV not too long ago. So the two products moving in diametrically opposite positions. I wonder what happened to VXX to maybe cause that. But maybe, put in quotes there, maybe we're starting to see some volume starting to move in the right direction again. The big position out there, the June 80s in VXX. So I don't think we're going to be seeing those come into fruition too much. Eric, do you pay much attention to the world of volatility ETPs out there? You know, your SVIXs and your UVIXs and your UVXYs. And if so, sir, anything catching your eye out there this week?
You know, I have not really been trading those lately. I do from time to time if it makes sense. I always like the leveraged products too. So, but at the moment, not as much.
We are trading these days. It is earnings season. A lot of earnings vol on the docket for you folks. Tons of big names popping off. We mentioned Apple at the top of the show, but there's more than just that. We had Bumble, DoorDash, Peloton, Coinbase yesterday, DraftKings, Lyft, and Moderna, and Portillo's. That was just yesterday. AMC today, Match Group, Uber, Pfizer, Marriott, AMD, Ford, Starbucks earlier this week, SoFi, just an embarrassment of riches, WWE, you name it. Everyone's popping off last week and this week. So a lot of great data for you folks. If you want to sink your teeth into the earnings vol, and hey, you're listening to this show, so you want all the vol you can get. We got updated earnings move results, and earnings season reports for you, courtesy of our friends over there in Oratsland, completely for free because we love you folks. There's dozens upon dozens of tickers here that we're crunching the numbers on for you. So you can find something that intrigues you. I guarantee it pretty much here in this list. You can also look, of course, not just at what's coming up, but how they performed in the past, how the earnings season is shaping up right now, which is hanging out right now at about 95%, which, of course, 100% would mean everything moved in lockstep with its straddle, and we're moving a little bit less than that now. So we'll see. The season is still young. Only 280 names have reported as of this report, so a lot more to come over there, as well as the earnings trades we're tracking for you folks. You can check it all out for free because we love you. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side of volatility. And now it's time for us to continue our journey into the dark side of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everyone, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the volatility gods and see what they have on the docket for us this time next week. I came within spitting distance of a bullseye last week, given the fact that we had to talk about it a day early. I probably should widen the goalposts. I think I was 0.2 of a point away. I probably should give myself a bullseye as opposed to our 0.1 of a point normal frame of reference out there. But intriguing stuff nonetheless. Let's see if any of us can have success this week. A pretty tumultuous week out there in the vol landscape. Coming into the end of the show, we are seeing the market still pretty much in rally ho mode. S&P up about 1 2/3% now. Dow up about 1 1/3%. Nasdaq up over 2, about 2.1%. So the rally continuing out there as VIX right now, right around 17.25. And we got VOLQ at about 1860. So no joy for me. I was at 1835 and 20.25 this week. So I was feeling a little bit more love. I was feeling what we had earlier this week. The challenge is always, can it persist? And the answer this week is clearly no. Andrew was at a 16.25, so he was within a point in the other direction. And VOLQ 19.25, so no winner for him either. Kevin had a VIX of an 18.5 and a VOLQ of 20. Kevin, if you had just made your VIX your VOLQ, sir, you would have been a winner chicken dinner. You would have been within 0.09, sir. So maybe we just had those backwards for you. Did you want your VOLQ to actually be 18.5, sir?
No, but I might repeat my my crystal ball bets for the following week, and I think eventually you're going to be right if you stick with the same numbers.
Taking the old
People
Russell
do that in
Rhodes
the lottery too.
Yeah, taking the old Russell Rhodes strategy on the show. Pick the same upside every week, and eventually you're going to be right. So officially, let me put you down officially then, Kevin. Are you officially going for the same numbers as last week, 18.5 and 20?
Let's make it official, Mark.
All right.
18.5, 20. 18.50 spread. Bring it.
All right, and Eric. Hopefully they prepared you, sir, because this is where it gets dangerous. This is where the rubber meets the road, sir. What are you feeling for both VIX and VOLQ for this time next week, sir?
Yeah, I was actually going to say 18.5 for the VIX, but I don't want to steal Kevin's thunder. I'm going to carp his market.
He did that on purpose to you. You know he did that on purpose. He knew what you were putting down.
I'm going to go 18.25 on the VIX and probably 9. Wait, was his VOLQ 19.20 as well?
He was 20 even.
Oh, yeah, I'm 19.20. I'm 18.25, VIX 19.20.
There you go. 18.25.
Narrow spread. I like it.
Yeah, nice and tight vol spread. We got within a point this week, so it could happen again. It could happen again out there, VIX to VOLQ. All right, and bringing up the rear, listeners, I was feeling more vol. I was thinking the vol was going to persist last week. Unfortunately, it didn't all week. What will we see this time next week? Will we see more earnings start to drive more vol in the market again? Or are we going to see the vol get sucked out again like we did last week, down to a 15 handle again? That's what makes this game so difficult, right? I'm going to lean, surprise, on the former side of that. Maybe some of the vol persists. Maybe we get some of these news everyone's talking about that drives us down a little bit. We've seen VIX can move again. We're back in the era of VIX moving 2, 3, 4, even 5 points in a week. So that's intriguing in and of itself, sometimes in the same session. So I'm going to say a little bit more upside for VIX as well. I'm going to say we're at a 17.25 right now. That's why I shouldn't let Kevin go first. I don't hate where he was this week. Kevin, you're throwing us all for a loop here. Okay, you know what? I'm gonna be the nice guy then. I'm gonna have to come in just a little bit higher. I'm gonna say 18 even for VIX, and that puts me at a VOLQ. I'm gonna say that spread gets back to about less than a point. I'm gonna say 18.90. Oh, there you go. That's a tight market for this week, listeners. But you know what? Sometimes that's just how it works out here on the show. All right, listeners, that music means we've come to the end of another episode of Volatility Views, also the end of another broadcast week for all of you on-demand listeners. Remember, if you want the fun to continue, just head on over to theoptionsinsider.com/pro. I'll be back with our buddy, Mr. Matt, the keeper of all this earnings volatility data, to talk about all the unusual activity that's lighting up his tape this week. Spoiler alert, there's quite a bit of it, so it should be fun. Theoptionsinsider.com/pro is a place to get options, oddities, everything else we're doing over there on the pro side. And of course, thank you to our guest, Mr. Eric. Eric, if folks want to check out your podcast, tell them the name again and give them a little bit of a plug, what you got coming up on the show.
Yeah, absolutely. Every week. So the name is The Weekly Option. Every week, I look at a handful of trades, typically a cover call, a credit spread, and a debit spread. Again, most of my listeners are retail listeners looking to benefit from price movement versus volatility. So that's sort of the way the show is geared. And I produce 3 new trades and cover the last 3 every week. So if you want to reach out to me directly, it's Eric, ERIC, at theweeklyoption.com. Or you can find the show on any place that you listen to podcasts, iTunes, Stitcher, you name it.
So The Weekly Option, I'm guessing it's a daily show?
No, it's a weekly. It's a weekly show.
Once a month kind of show? Is that what we're talking about?
Yeah, exactly.
It's hard to tell from the name. I couldn't really tell.
I was thinking hourly.
Hey,
but I think
we might be there.
Took that URL, so I just went with weekly.
We might be there soon if we get all these short duration trend continues. We could all be talking about hourly and quicker options pretty soon. Check him out, listeners. The Weekly Option. You're listening to this. Obviously, you like a good podcast. Maybe you want to check that one out as well. And Kevin, if they want some NASDAQ options content, where should they go? What should they do?
Yeah, they can find that by a simple Google or Bing search. But if anybody in the audience is interested in an event that we're putting on with the CFA Society of Philadelphia in about 2 weeks, so that's May 18th, I'm going to be out in our Philadelphia office. It is going to be options focused. We have a great group of industry veterans that are going to be talking. So if you want to meet in the flesh, just like Mark and I did last week, that would be wonderful. I'll have that up on my LinkedIn shortly. And Mark, as always, thank you for the opportunity to be here. Eric, always good to talk to you.
Just seeing some of our pro guesses rolling in for what they're feeling for Vol next week. Options Queen, she's always eerily precise. You got to pay attention to her prognostication. She's saying 16.5 for this time next week. So back down to some lower levels, 1780 for VOLQ. We got some more, couple of 1780s coming in. I don't know. You two are carping each other. All you folks carping each other here in the live. 18 in the third. All kinds of fun. Get your Vol guesses in. If you're not listening live, listeners, you can, of course, do it after the fact. If you're on the podcast on-demand listeners, try to get it in today. We want to make it fair for everybody. You can't guess Vol at the end of the day on Thursday next week. That wouldn't be fair for everyone. So get it in today. We'll add you into the mix if anyone gets close next week. Our producers will reach out for some fabulous prizes. Again, that's going to do it for us on the on-demand side. Pro folks, stay tuned. I'll be back in a little bit with the Oracle of New Hampshire himself to break down the mad week that was from an options oddities perspective. For the rest of you, we'll see you back here on Monday for the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, Nasdaq proudly launched the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the Nasdaq 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched Nasdaq 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on Nasdaq's full suite of index options products at www.nasdaq.com/NASDAQ-100-XND-NQX-NDX-VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.